Hello Premium Hunters, and welcome to another episode of my weekly portfolio performance update. This update is for week 11, which is March 10th through the 14th. My name is Andrew, and I'm consistently averaging about $5,000 per week with my options trading. And this is where I pull back the curtain to show you exactly what I do and how I do it. I post these update videos each week, typically on Mondays for the previous week. So if you're interested in following me on my journey, be sure to like, subscribe, and hit that notification bell. Just a disclaimer, I'm not a financial advisor, so please consult with a qualified financial advisor before making any investment decisions. So why am I doing this? Well, first of all, if you're new to options trading, I want you to know that it is legit. I'm giving you the ability to see real results from a real trader, and I'm documenting these trades in real time so that you can see that, yes, they are indeed real. And then second, my goal is to build a community of like-minded people who are interested in options trading. Anyone from newbies who don't know what an option is to experienced experts. Options trading is a complex topic, so there's so much to know and learn, and I think this is a great way to learn from each other. So here's what I cover in these videos. First, I go over the strategies that I used, that I closed out for the following week, and I'll give you an overview of how those strategies work and the overall goal for them. And then I'll hop into the stock charts for a few of them that are annotated to help illustrate how these trades work. And then I'll show you an overall profit and loss for those trades. From there, I will show the overall performance for the week to show you how I performed for all of the trades for the given week. And then I'll compare the performance of this week to the performance of previous weeks throughout the year. And then I'll share any insights that I've gained from that analysis. So if you're new to options trading, I do encourage you to watch my Options Demystified video where I cover the basics of options. This will give you a good foundation for what I'm about to cover in this video, and you can find the link in the description below. So before we get into this week's update, here is the table that documents my profit and loss for all of the weeks so far this year in 2025. And as you can see, my total profit for the year so far is $53,160, and my average profit is $5,316 per week. So getting into this week, the trades that I closed for last week were 14 trades, which is a little bit lower than the average, but if you've been paying attention to the stock market, you know that it's been very challenging. We've seen a lot of volatility and a lot of sell-off, which is not typical, at least for how the markets have been performing and behaving over the last few years. So this is definitely a new type of market that we're in right now, which makes things a little more challenging. So now what I'm going to do is switch over to my trade tracking platform, which is TradeZella. So here we are, my trading tracking platform, TradeZella. And as I've mentioned before, and I'll mention it again, it's very important for you to track your trades so that you can go back and analyze your trades. That's one of the mistakes that I made when I first started trading options, is that I didn't track them. I could see that I was having success just by the trades that were closing out profitable, but with no ability to go back and easily see how I performed week over week and month over month, it made it very difficult to see exactly how well I was doing and what was successful and what wasn't successful. So if you are new to options trading and you need a platform to track your trades, this is a good option. There are other options out there, but I will say they're hard to find, and I'm not sure why they're so hard to find, but they are somewhat difficult to find. So if you think this platform could be beneficial for you, then I do have an affiliate link in the description below. It does help out the channel, so I'd encourage you to use that. But definitely, no matter how you do it, make sure you track your trades. And so what I have on my screen right now are all of my trades for week 11. And so I'm going to go through these. What I'm going to do is show you a couple of samples from the different strategies that I've used. I will say that in week 11, things have slowed down a little bit because of the volatility in the market. It's making it more difficult to find trades that will work, because what's happening is that volatility is expanding which is making options prices increase. And when we're selling options, we want to sell them higher and buy them back lower. So when the prices of options are expanding, it makes it more difficult to buy them back at a lower price. So hopefully as time moves forward, things will settle out a little bit, that volatility will come in, and it will make it easier to profit from these option strategies. But at the end of the day, I have been profitable, and so that's a good thing. So let's take a look at the trades I did last week to show you how these have worked out. So the two strategies that I traded last week, there were just two of them, was the poor man's covered call and the weekly wheel. So the first one I'm going to show you, because I didn't do as many of them, is the poor man's covered call. So what I can do is come into my platform and just filter out for the poor man's covered call. All right, so I went ahead and filtered my trades just for the poor man's covered call. And so now that we just have those displayed, and as you can see, there's just two of them, you can now see the cumulative profit and loss for that strategy, which is $168.19. I did one trade on NVIDIA and one on Palantir. And I'm going to go ahead and click into the Palantir trade. I sold two contracts. I sold them for $1.17 and then bought them back for 58 cents. So as I've said in previous videos, when I enter these trades, I immediately, after the trade is opened, put in a good to cancel order for a 50% profit, so that when my trade, if my trade reaches that level, it will automatically close out. There's nothing I have to do. It just reaches 50% and I hear the trade being executed. I usually hear it when it happens, and I know that I made a profit. And so in this case, 50% profit was 58 cents. And let me hop into the chart here to show you what it looks like. All right, so I've got the chart set up here so that we can easily see the annotations on the chart that I add so that we can easily see how this trade works. The purple line is a leap call option that I purchased way back. Let's take a look. We'll scroll back to see when I purchased this. We have to go pretty far back here. Oh, there it is. So we purchased it in November, around November 19th, and I've owned this, and it's a 42 strike price call that I owned. And when you buy a leap option, it allows you to control 100 shares for each option that you buy for a much lower capital requirement than what it would cost to buy the stock outright. So that's the advantage of buying a long-term leap, and it's one of the only times that I buy options rather than selling them. But now that I do own this option, this long-term option contract, I can sell calls safely against it. And so that's what I do here. And what that does is it allows me to generate a little extra income off of this option, this long-term option that I own. Now the strategy for the long-term option or the leap that I own is for that stock price to go up over time, in which case I'll be able to sell that call for a much higher price and make a profit there. But an additional strategy that I can employ now that I own that call is the poor man's covered call, which is where I sell calls against the calls that I own. So that's what I did here, and I sold those at an $89 strike price. I sold those on March 7th and then bought them back on March 10th, so just a few days later. And as I said, I made $115 on that trade. So again, I had a total of two poor man covered calls that I closed out last week. The other one was NVIDIA, where I made a net profit of $52.73 with a total of $168.19 total for the strategy for last week. So now let me go ahead and switch over to my other strategy, which was the weekly wheel. And all I have to do is come into my filters, go to my playbook, because that's how I have my strategies defined under the playbook. I can click on that. I can deselect the poor man's covered call. I can then select weekly wheel, apply that filter, and then you're going to see a list of all of the weekly wheel option strategies that I closed out for last week. And as you can see, there's 12 of them for a total profit of $3,225 $25, almost $26. Now, if I scroll through these trades, what I have here is a tag that is assigned to these transactions within TradeZella. It identifies what level the weekly wheel trade is trading at. And if you go back and watch my video, how to print money using the Wheel of Fortune strategy, it explains how I implement this strategy, and I use a process called ration capital to ensure that I'm not stuck in a position where the stock has fallen too far below the purchase price in the event that I sold a put, was forced to buy the stock at the strike price of that put as the stock price declines. So if you haven't watched that video, I highly encourage you to go back and watch it. It is linked in the description below. But if we scroll through this list, you can see the WW indicates the level at which the strategy is being deployed. So as you can see, most of these trades are calls that are being sold. And if I'm selling calls, that means I own the stock, which means I sold puts that got assigned and forced me to buy the stock. So when I am forced to buy the stock and I own the stock, I can then continue to make income by selling calls. And as I scroll through this list, I see there's only one put that I sold during the week, and that was at a level 2, which means I own stock in that particular underlying, which is Palantir. But let's go ahead and take a look at this trade. I'll open this just so we can see what this looks like. All right, so now I have the stock chart open and we can see the annotations which identify the trade. You can see the red arrow, which indicates when I opened the position. I opened it on March 5th at 14.15. I sold 6 contracts for $2.84 each. The green line indicates the strike price for the option contract that I sold, which, as we can see on the right side, is $86. So as long as the stock price remains above the strike price at expiration, then I will be able to keep that premium that I collected and I won't have to buy the stock. Now, as you can see, for the vast majority of the time that this option trade was open, the put was actually in the money, meaning the stock price was below the strike price of the option contract. So I was very fortunate here that I didn't have to buy the shares, because what happened towards the very end, the hourglass indicates the expiration date of the contract, which was March 14th. And right on the 14th, the option went back out of the money, which enabled me to close out the position for a 50% profit. So on this one, I was able to make $844.39. I opened it by selling it at $2.84 per contract, and I closed it by buying it back for $1.42 per contract. All right, so since we looked at a put for Palantir, why don't we take a look at a call that I sold, which is a level 1 call. Now, the level 1 call would be a call against the shares that I bought in Palantir when that put that I sold at that time went in the money, forcing me to buy the share. And as we can see, I sold the 106 call in the instrument column of this table. That's what that means. The 106 call is the call that I sold for this transaction. So let's jump into the stock chart. All right, so I have the stock chart open now. And let me just explain what we've got going on the screen here. So you can see that I sold this call option, which was a 106 strike price call. That's the green line. And this was sold on the 10th of March for 29 cents per contract. I sold 6 contracts. And then I bought those back on the 13th of March for 14 cents. So the reason I'm not collecting a whole lot for these calls that I'm selling is because the stock price is so far away from the call price that I'm selling. Well, you might ask, well, if you can collect more by selling a call that's closer to the strike price, why wouldn't you do that? Well, here's the reason. My cost basis for the shares that I was forced to buy, and let me explain this blue line. The blue line are the shares that I bought. So as you can see, the blue line is at $123 per share. That's the amount that I paid for the shares that I purchased. So I purchased these shares for $123, but it was only after selling a series of puts many times over, meaning that I was collecting premium every time I sold this put, and every time the stock didn't go into money, I just was able to keep 50% of the premium that I sold, 50% or more. And because of that, that drove my cost basis down to $106.16. All of the options that I sold on this particular position at this price level has decreased my cost basis down to the 106.16 level. So the reason why I cannot sell a call below that strike price is because if I do, and if the stock rallies above that strike price and closes above that strike price at expiration, I will have to sell that stock at that price. And if that strike price is below my cost basis, I'm locking in a loss. So this is what I was referring to earlier. If you get stuck in a position where you own the shares at a cost basis that's too far away from the stock price after the stock drops, you're not going to be able to sell calls without locking yourself into a potential loss position and still be able to collect a decent amount of premium for doing so. So that's the situation that I'm in here right now with Palantir on these level 1 calls that I'm selling. But after saying all of that, I still sell these calls even though I'm not generating a lot of income. If I'm able to sell calls and collect some income, I'm probably going to do it. Typically, if the income that I receive is less than 5 cents, then I probably won't do it because at that point, it's just not worth my time and effort to record all of these transactions, especially after you consider the commissions and fees that I have to pay every time I do these trades. But in any case, in this particular case, I was able to collect $86.20, and every little bit adds up. So I still do it if I can make a decent amount of money that I can justify my time and effort. So going back to our list, we can see that I made a total of $3,225.54. And you can also see that there are 3 main underlying stocks that I trade this strategy on, which is Google, Amazon, and Palantir. If I want to see the total that I've collected for each of them, I can just come up to my filters and I can select the symbol and I can enter in the underlying that I want to see the total for, apply the filter, and I can see here that I've done 2 on Amazon. They were both level 1 calls and made a total of $182.86. Let's take a look at NVIDIA. I'm sorry, not NVIDIA, but Google. Apply, and we can see that I did 7 of those for a total of $2,000 and just under $89. And we had several level 2 calls and several level 1 calls that I sold to collect that amount of money. And then the last one that I traded was Palantir. And we can see there was a total of 3 of those for a total profit of $953.80. There was the 1 level 2 put and then 2 level 1 calls. So now to see the total profit that I've made for the week, all I have to do is come into my filters, deselect the symbol, and then deselect the playbook or the strategy, and just look at all of the trades that have the week 11 tag assigned to it, apply that, and see that there was a total of 14 trades, a total profit of $3,393.73. They were all winners, all 14 of them, and I had an average profit of $242 per trade for week 11. The other thing I like to do is come back to my dashboard, because on the dashboard, one thing that I like to look at, I can scroll down and I can see for the week, this was week 11, which was the 10th through the 14th, I can see all of my trades broken down day by day. So I can see that on Monday I did 8 trades for a total of just over $1,200 profit. On Tuesday, I did 5 trades for around $837 of profit. Thursday was 6 trades for $345, and Friday was 3 trades for $985. So the total again for the week was right around $3,390 for the week. And that's something I just like to look at to see how I did day by day throughout the week. All right, so switching back to my annual table, my annual tracker for the year, tracking each week, we plug in week 11, $3,393. That brings our annual total to $56,553, with our average at $5,141. We are definitely off from last week, and we're definitely below our average, but like I said, it's been challenging. The markets have been very volatile. It's been tough. It makes it much more difficult. But this also shows, I mean, if we were flat out just trading stocks, then I don't know that we'd be showing a profit this week at all. Not unless we had the foresight to sell short, which pretty much requires a crystal ball to know when to go short and when to go long. So this just proves that in options trading strategies, you can make money when stocks are going up, you can make money when stocks are going sideways, and you can also make money when stocks are going down. Now, I am hoping for the markets to settle out moving forward, not to be quite so volatile. That will bring the overall volatility in and make it a little bit easier for us to make money through these options trading strategies. And also one thing to keep in mind is that when volatility expands, it also increases your capital requirements for these trades that you have on. And when your capital requirement is increased by your trading platform, it means that the capital that you have available to put on more trades is reduced. And if you're following a very strict risk management strategy, and you're just not going to be able to put on as many trades as you would if volatility was a little lower, giving you more capital available to put on those trades. But anyway, that's just how the markets are. They're somewhat unpredictable, and you just have to play the cards that are dealt, and that's what we're doing currently. So that's it for this week's update. Thanks for stopping by to check it out. And if you have any questions or comments, please write them in the comments section below. And if you like this kind of content, please make sure you like, subscribe, and hit that notification bell so that you will be notified when I upload more content. Take care for now, and I look forward to more better options in the future. Bye-bye, everybody.